Today's guest is one of the most respected and closely followed names in the precious metals sector. Michael Gentile, welcome to Ron's Basement.
Great to be here, Ron.
So, Michael, I thought that we could start out by talking about your overall thoughts on the gold and silver market, but maybe it'll be beneficial to our viewer as well for you to share a few words about you, your background, and kind of how you got to where you are today as a major investor in a number of junior mining sector companies.
Sure. Yeah, I've been investing in the commodity sector, Ron, since 1996 or 1997. So, it's my first sector I ever started investing in was the commodities. My first and most passionate love, in all the markets I've covered, all the sectors I've covered over my career. I worked 18 years as an institutional money manager for an investment firm in Montreal. That was from about 2001 to 2018. And then 2018, I know you have twins as well, Ron. I was blessed with twin daughters. But I already had three daughters before that. So I had five beautiful young girls looking in the eyes, 7.5 years old and younger. So I need to rethink my career at that point in time. And the time I was spending at the office, I was traveling a lot for work back then. So I took a little time out from work. I quit a job that I absolutely loved, institutional money management. I was investing in, the typical 200 million to 10 billion market cap companies. So mainly producers, either emerging producers or producing assets. I covered all sectors, but I was the in-house commodity specialist at my old firm. In 2018, you may recall gold was like $1,300 an ounce. It's just coming off the lows of $1,100 an ounce in 2015. I've always been a contrarian. I think it's how you make money in commodities when you buy when there's blood in the streets, when you have a different view of the market. So I was sitting at home. I'd never gone to the wild west of microcap resource investing, mainly because my professional sphere, the minimum market cap we could invest in was 200 million and above. But I was sitting at home, had a bunch of capital on my hands for investing my whole life and saving well. And I saw a huge opportunity in the gold space. And I started digging into these, 5, 10, $15 million market cap juniors that I never looked at professionally before. And I saw a huge opportunity because the market had been so depressed for so many years. I was able to buy companies that had already made significant discoveries. So taking exploration risk out of the story, had run out of cash basically because the bear market had gone on from 2012 to 2018 almost nonstop for $5-10 million market cap. So I did a couple of significant placements in juniors. And as I got more involved, I realized that these juniors were often run by good geologists that had good projects, but they had very little idea of how to raise money, who to raise money from, how to tell their story properly in the markets, how to raise capital at the right times versus the wrong times, from the right investors versus the wrong type of investors you want in your capital structure. So I went from more of a passive investor, just making a few investments that I thought would make me a lot of money, to actually rolling up my sleeves and getting very involved behind these companies, owning, 5, 10, 15, 20% of the company. In some cases, joining the boards, in some cases being a strategic advisor, in other cases, just being the largest shareholder and having, regular phone calls with management to make sure that we were aligned on strategy. I've had a lot of fun doing that, Ron. I've been really leaning into my strengths and really enjoying what I do. And as of today, to kind of buckle the story up here, I got about 25 positions in the junior mining sector, where I'm probably the top 1, 2, 3, 4, or 5 number shareholder on the register. I'm on 5 or 6 boards. I'm a strategic advisor to a couple other companies, and I'm heavily involved in the ones where I don't have a formally titled role with the companies. And I just continue to see, Ron, a huge opportunity in the sector. I mean, I got involved when gold was between 1,100 and 1,300. Today, gold is what, $2,600. I hit $2,800 an ounce earlier this month, and these stocks are still trading at or below the valuations when I got involved in the space. He told me, Ron, 5 years ago that when I started making my investments, that gold would be $2,600 an ounce. I would tell you my portfolio would be multiples of the value where it is today. So that's been frustrating for you, I'm sure, for me as well. But it's also incredibly exciting because it's very rare you get an opportunity in the commodity space, Ron, where the commodity is making new all-time highs, and yet the juniors are still trading like it's 2018. And so that to me is an incredible dichotomy. It's an incredible opportunity. So I continue to invest heavily. I probably have 80% of my net worth invested in the juniors right now. So I'm making a big bet, the money where my mouth is. And thus far, my thesis on the macro side has been completely accurate in terms of where I thought the commodity would go. The stocks have lagged, but I think the stocks are the last piece of the puzzle to come together here and catch up to the commodity prices.
Yeah. I'm in the almost exact same position. Probably, definitely not with as much money as you have, but I have about 25 positions in junior, mostly gold and silver development stage companies, because I think it's critical to circle back to what you said. You can still buy these companies that already have defined ounces in the ground and prospects for some future exploration success. And does it still feel like that you can buy them for almost pennies on the dollar? That's the case?
It's incredible. I was at a major mining conference in Quebec 2 weeks ago, around the annual Quebec Mining Association conference that we have. It was in Montreal, and I met with a couple of major mining companies, and they know I'm heavily involved in the juniors. We always have dialogue constantly with the large corporates. They're always kicking tires and looking. And I had a pretty frank conversation with one of the top corporate geos at one of the mining companies that I'll remain nameless. But we had this really interesting discussion about, I asked them, if you take a major mining company, take Kinross, Newmont, Agnico, Barrick, whoever it is, and you take their exploration budget, the amount of money they spend on exploration, the overhead, the G&A, the employees they have to hire to manage the programs around the world, and you add up all the money they spend, and you add up all the money they spend on programs that don't lead to discovery, because as you know, Ron, 99 times out of 100 when you drill, you don't find an economic deposit. So you add all those holes they drilled that did not add to anything, and then you summarize all the ounces they find that end up being economic deposits or potentially economic deposits. They're all in discovery costs. It's probably, depending on how good the company is, anywhere from $100 to $300 an ounce. This company said between $150 and $200 an ounce discovery cost. You take your portfolio of juniors, Ron, I take my portfolio of juniors. I have very few juniors that are trading above $20, $30 an ounce in the ground, right? The occasional one, $30, $40 an ounce is a really high quality one. So if you're a major mining company, you produce 2, 3, 4 million ounces a year of production. That means every year you've got to find 4 million ounces to replace what you produce. But if you don't do that on a regular basis, you'll be out of business in 10, 15, 20 years because you'll be out of resources to produce. So these companies have to find it or they got to buy it. And we're both pretty rational economic beings here on this call, Ron. We'd say, you can go find it for $150, $200 an ounce, or today you can go buy it for $5 to $20 an ounce. And I think it's don't take the risk of exploration. Don't take the risk of not finding anything. Don't take the time risk of having to spend 3, 4, 5 years defining those resources. So you fast forward your development. I think it's an obvious proposition for the majors to come in and start buying resources. And we're starting to see it. I think Eagle in the last month has made an investment in ATAC Resources. I think Foran Mining, I think came out yesterday, they bought shares in Collective. So the bigger companies start to generate lots and lots of free cash at these higher gold prices. And they're starting to say, I'm going to buy 9, 20% of these juniors because if the market doesn't price them properly, they know what it costs to find it themselves. If they can buy it, like you said, Ron, at pennies on the dollar, it's a no-brainer. So first stage would be significant investments in these juniors. And the next step is going to be starting to be M&A of these junior exploration companies and resource companies. And once that gun goes off, it's going to be a race because then all the majors are going to go, okay, we got to move before someone else grabs these projects that we've been following for several years. I think we're going to start to see that. We're seeing it in the producers, M&A. We're seeing it in the major developers, Filo getting taken out, Sabina got taken out by B2 Gold. We've seen a rash of acquisitions in the development space. So Cisco Mining got taken out. So that's going to start to move down cap because the inventory of quality projects that are close to permitted or close to production are virtually all acquired. So now you've got to move down to the PEA stage and resource stage projects that are trading at the widest discount to anybody in the market today. So that's why I see so much value. So I continue to be so aggressively buying these stocks. And like I said, with the producers being in such good financial health, buying these companies often 1 or 2 months of free cash flow or less for these producers to do an acquisition, and their balance sheets are clean. They're paying dividends. They're buying back stock. So the big mining companies have never been in a better position to do M&A than they are today, nor are they seeing better value than they probably ever have to do M&A today as well.
Wow, you summed it up. I don't know what else to ask you at this point, Michael, because right. I mean, it's true. The big mining companies over the last 10 years were more focused on fixing their balance sheets, but it's so critical for our viewer to remember that every time the big mining companies mine an ounce of gold or silver out of the ground, it's gone, and they need to replenish that. And they have not made the investment to replenish it. And you have this group of junior development stage and, like you said, exploration stage, even companies sitting there with ounces in the ground valued literally at like $5 to $20. And if the big companies decide that they want to try to find it on their own, they're likely on average going to spend $150 to $200 just attempting to find more gold and silver. At what point, our mutual friend Peter Grandich once told me that the number of people that are trading the junior mining sector stocks right now could likely fit inside of a high school basketball gym. At what point do you think the market wakes up and we see some money flowing back into the junior sector? And I have another question for you on that same point, which is, do you agree with the idea that since the sector has become so out of favor, which makes it attractive to people like us who are contrarian investors, but that it won't take a lot of money coming into the sector to make a big change? Like, it's been beaten down so low that the path of least resistance a small amount of money could make a major impact within the sector that you and I hold so dear to our heart. If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
Yeah, two great questions, Ron. Two questions that I spend many nights in my lying awake in my bed thinking about. Obviously, I said before earlier that I've never been so right in 25 years on a commodity call. Typically, when you get the
Yeah.
commodity right in this business, I was fortunate enough to invest in oil in 1997 or 98 when oil was $10 a barrel, and the consensus at the time was oil was dead. It was going to $5 a barrel. Nobody needed it anymore, and oil went from 10 to 140, and that move, all the oil stocks followed like rocket ships for over an 8 to 10 year period. So I've never seen a sector where, I said before, the commodities making new all-time highs and the stocks don't rally. So I spent a lot of time going, what am I missing? What's causing the lag? Is there some fatal flaw or some issue that would prevent these stocks from trading like commodity stocks have traded for the last 150 years, pretty consistently following the commodity higher? There's a few things, Ron, that I would say that I've been waiting to see, that we didn't see in the last rally, that have caused it, and a few things that are still yet to come. So the first thing I would say would be, in COVID times, gold had a massive rally from $1,600 an ounce to $2,000 an ounce. And all these junior stocks traded like you and I over a whole career would expect they would. They all had epic runs of 50 to 400% in a very short period of time as the gold price rallied from $1,600 to $2,000 an ounce. Yeah. So what happened is the gold stocks rally because the market said, okay, commodity goes up, cash flow is going to increase, the health of the sector is going to increase, therefore all names in the sector should rally off of higher valuations. What ended up happening, as we recall, Ron, we had a massive inflationary period where the producers, the Newmonts, the Barricks, the Agnicos of the world, saw massive all-in sustaining cost inflation. So the gold price went from $1,600 to $2,000 an ounce, but their costs on an all-in sustaining basis went up $400 to $500 an ounce or more. So at the end of that 1 to 2 year period, the generalist investors like myself, who run institutional money as well, I have an institutional management firm called Fashion Asset Management. They were expecting to see large free cash flow, large increases in EBITDA and buybacks and clean up their balance sheets. But what ended up happening is the companies were making less money per ounce profit margin in 2022 or 23 than they were in 2020. So the market said, oh, you guys are a bunch of terribly run companies. Gold price goes up, you can't make any money. Gold price goes down, you almost go bankrupt. I give up on the sector. And you saw that mass hand towel throwing an exercise. I remember I was at the BMO mining conference, which is the major mining mega conference of the industry. All the big mining companies are there. I think Newmont was making a new all-time low as gold was making a new high at that conference. And investors were just so fed up saying, you're never going to make any money. If you can't make money with gold new all-time highs, you're just useless to me. And investors are just throwing the whole sector out. So that created a big overhang on the sector. What you've had recently, Ron, is gold's gone from 1,800 to a high of 2,000. Now we're back to around 26. You look at the Q2 reports, the Q3 reports, the free cash flow of these companies is exploding. Their profit margins per ounce is exploding because ASIC inflation's kind of slowed down a bit. So our ASIC has been sort of flat up while the gold price has been dramatically increasing. So now we're starting to see that increased profitability, increased free cash flow, cleaning up the balance sheets, buying back stock, what generalist investors want to see. And you're seeing generalists flow back into the larger gold producing companies. You're seeing the single asset producers, the Wesdomes, the Lundin Golds, the Alamoses of the world that are smaller producers, all having huge moves in the stocks. And now we're seeing, because we're seeing M&A in the late stage developers, like I said, the Skeena, the Osisko Minings, the Sabinas, the Philos, those stocks are all taking off. So we're seeing better profitability, generalists flowing back in the sector, all stratas of the sector working, except our beloved juniors, which is the last piece of the puzzle. And they're always the ones that rally last. But this time, all the boxes are ticking. The one thing that is holding us back that I've not seen yet, and I think your viewers should pay attention to, it reminds me a lot of the late 90s and the dot-com boom when tech stocks were on fire. Nobody wanted old economy stocks. Everybody was mesmerized by the dot-com stocks. I remember Warren Buffett was senile. He'd lost the plot. He no longer understood how to invest. He was this crazy guy buying banks and railroads and coal stocks and all kinds of stuff he was buying back then. Right. And because investors were mesmerized by dot-coms. Well, the same mesmerization is happening today on the AI trend. So investors are mesmerized by the Magnificent Seven. They're mesmerized by the AI stocks, and that is sucking a lot of money, speculative money, that otherwise would have gone to the juniors into tech. And if you look what happened when the tech bubble burst in 01, that's when oil stocks and
Yep.
commodity stocks tick off.
Yep.
So that's, the last piece of the puzzle. I would like to see the tech sector roll over, or the gold sector start to outperform the tech sector. It's pretty close this year. There's a pretty good horse race in terms of return.
Yep.
When the outperformance starts in gold stocks, I'm almost convinced it will, that you'll see money flowing out of tech into precious metals. And to close the loop on your last point, which is a very good one, the sector is so small. Nvidia, I think its market cap is just Nvidia alone is 2 to 3 times the market cap of the entire worldwide mining sector. I'm talking about the BHPs, the Freeports. Like, take every mining stock in the world listed, it's half or a third of the value of just one stock, Nvidia. So think about when that stock starts to roll over, when the tech stocks in general start to roll over, just a little bit of money coming out of tech into mining, because the market caps are so tiny on a relative basis to the market cap globally. A little bit of money coming into sector can have massive moves in these names. And in the junior level, it's even more dramatic. It's such a tiny market cap that a little bit of fund flows to our sector. That's why you can see 200, 300, 400, 500% returns in these stocks very, very quickly when the fund flows start to shift. So fundamentally, all the boxes are being ticked. Fund flow wise, we're starting to perform as well or better in the tech sector. Once that sector starts to soften a little bit more, I think you're going to see some dramatic fund flows into the space, and that'll cause even more outsized moves in the names.
Yeah. Yeah. Thank you, Michael. So and please correct me if I'm wrong, but when I think about the junior mining sector, I kind of think of them as like the future of gold and silver production, right? They're finding the ounces in the ground. There's one company I'd like to touch on, if you have a few more minutes, that I think both of us own, Captan Silver. A lot of my viewers are very interested in silver, and they're a Mexican based silver exploration company, but they already have some silver in the ground and some gold in the ground. I know it's a stock that you own as well. Any thoughts you can share with us on Captan?
Yeah, I know your viewers enjoy silver. I also do like investing in silver. I'm a bit of a value contrarian investor. So my hang up why I've not invested in more silver names in the past is generally they tend to be a little bit more expensive than the gold names on a per ounce basis or on a cash flow valuation basis. So I'm always looking for silver names. I tend to be a little bit more selective because I'm constantly comparing them to my gold valuations that I can buy in the market. So Captan is a name for me that ticked all the boxes. Just for full disclosure, I'm one of the largest shareholders of the company. I own 16% of the company. Really love this story because it's got one of the best geological silver targets, I think, in the world. It's definitely not Mexico. It's one that Mexico's viewers know is a top silver mining jurisdiction. And why I like this company so much is it's got an intermediate sulfide epithermal system. And that's a lot of big words, geological words. But basically, they're very, very rare. What that means is a system that has potential deep roots. Some systems, they can go to 100, 200 meters deep. Intermediate sulfide epithermal systems can go to about 800 meters deep or more. They typically have excellent vertical continuity. And it's a bit of a fascinating story. I made my investment in Captan Silver when it was called Captan Mining because it was a gold oxide project, your classic, 500,000 to 1 million ounce oxide gold project in Mexico. They drilled a hole to further define the gold oxide resource that they had, and the hole went a little bit deeper through the pit shell, and they ended up hitting a silver, zinc, lead rich hole at the bottom of a gold deposit, and that caused a lot of surprise and a lot of interest in the story. And they said, we don't just have an oxide target here; we have a potential intermediate sulfide epithermal system. Then they drilled a bunch more holes, Ron, during the last little bit of the last bull market we had post-COVID, and they started hitting some massive silver holes, like 7 meters of 1,000 grams silver, 4.3 meters of 786 grams silver, I think 1.5 meters of over 1,400 grams silver. So they started hitting some massive silver holes. The stock had a huge run from 10 to about 70 cents while the last bull market was still breathing on and running hard. What I love about this company as well, Ron, is it's run by local Mexicans. So when you're in a foreign jurisdiction, let's say outside of Canada in the US, one thing I've learned over the years, I'm very open investing in foreign jurisdictions, but I love it and almost require when investing in these foreign jurisdictions that you have local content. And in this case, while Captan is listed on the TSX, it's got a Mexican-based CEO named Alberto Orozco. He's head of the Sonoran Mine Association. Some of the biggest mines companies in the world are on that board, and he's chairman of that board. They just brought in Fernando Alanis, who is a legend in Mexican mining. He was former head of Peñoles, Fresnillo. Legendary guy, look him up. He was super successful, built many, many mines. He's kind of the godfather of Mexican mining. He just joined the board. And then they also brought in Consterplan on their last financing, which is one of the largest construction E&C mining companies in Mexico for a 9.9% stake. So they've got great geology. They've got a great management team. What I've learned, Ron, in this business, you follow the smart money and you follow the smart people. So they got great geology, a great team, some of the best people in Mexico now joining the board and coming on as shareholders. And the last piece of the puzzle that I love too is a very tight share structure. So a lot of companies, Ron, you may know this, when they go public in the space, there's a lot of bad behavior. A lot of
Yeah.
company management teams give themselves penny paper, 1 cent stock. So they go public at 25 cents a share. And then you realize that management got 10 million shares at a penny. So they're coming public,
Right.
they're asking you to buy shares at 25 cents, but their shares are all costing them 1 cent. And they're already up 25 times their money before this company does anything. Captan, 65% of the stock is owned by their top 5 or 6 shareholders, including myself. They've never issued cheap paper to management team. Management team has bought stock with their own money, an average price around 20 cents a share. So all the shareholders are aligned. Local content, great geology, basically the who's who of Mexican mining behind this. And during the downturn, they didn't do what a lot of companies did, which is a lot of mining companies think they have to drill because that's why they exist. If your market cap falls to 5, 6 million, my advice to my mining companies was don't drill. Don't go do a $10 million drill program when you got a $5 million market cap. You're going to have 200% dilution. They
Right.
smartly stopped the drilling and they acquired all the land at now a 5 kilometer trend. They bulked up their land position very cheaply in the downturn. They're able to buy stuff cheaply. My advice was it's cheaper to buy than drill, cheaper to buy than
Mhm.
explore. So why don't you core up your land position, keep your share count tight, keep strategic investors like myself supporting the company. And now the silver market is starting to turn the corner. Get back out there,
Yeah.
do some drilling, remind the market of how great your silver deposit is, bring in the key cornerstone players to get this thing to the next level, and unlock a lot of value for shareholders. So they've done everything right. I can just love the story. I bought more of the last financing they did and continue to be one of my top holdings in my portfolio.
And their location is one which is surrounded by a lot of the world's biggest silver
Yep.
mining companies,
Mm-hmm.
correct, as
Yes.
well. Like this is in
Yep.
a really good neighborhood. So I
Correct.
imagine there's a lot of infrastructure in place, mining support,
Yep.
all that. Yeah.
It's one of the best. Durango, Mexico, one of the best jurisdictions to mine in. And just to give you an idea, back to geology for a second, intermediate sulfide epithermal systems, similar to, I'm not saying these are going to be the next one, but similar geological hallmarks of, Mag Silver, one UCPO's mine,
Right.
Lundin Gold's Fruta del Norte, Fresnillo Silver Mine, Fresnillo Silver Mine, which is the largest Mexican silver producer in Mexico. Silvercrest, which got taken out by Kerr, was a similar epithermal sulfide system, and Vizsla Silver. So that's kind of these are very
Yeah.
rare. They're very hard to find. Now, these early days, they've only drilled about 150 meters deep. They got to go at it and drill a little more aggressively, but it's got the hallmarks of a major system, and that's why it's attracting attention. And you're right, great district, great geology, and the right confirmation, the
Yeah.
right rocks to make a significant discovery, and silver focus, which is more and more rare these days.
Yeah. And the right management. I noticed I was looking through their investor presentation. Of course, you have Alberto, the CEO, but it looked like to me the remainder of the management team, like they had all worked together. Was it Argonaut
Mm-hmm.
Gold? I mean,
Yep,
like
that's
indeed.
right.
So this is like a team that has proven themselves in the past on other projects, and they kind of now moved on to this.
Yes.
It's a very, very exciting prospect.
This team, Alberta was the head of it. They're the ones. I mean, Argonaut Gold went through obviously a rough patch when they
Mhm.
started to build Magino. But at one point in time, I was an investor in a company 10 years ago, professionally, my institutional firm. They had $1 billion market cap based purely on Mexican production. They're producing 200,000, 300,000 ounces a year of Mexico in
Yeah.
Mexican gold production. Fernando and his team are the ones that built these open pit oxide heap leach deposits for Argonaut. So what I like about too is they got good geological IQ, Ron, but they've also got a team
Mhm.
that's taken something from exploration all the way to production. So they've got
Right.
the local talent and ability to get things permitted, get things built. So my time horizon when I invest, Ron, is not for 6 months. I'm looking for 3 to 10 years
Right.
investment horizon. So I'm always looking, does it have the geology to be a mine? I think it does. Does it have the team to de-risk it? Yes. Does it have the shareholders behind it to support it? And then if they do have the success with the geology, they have a team that knows what to do to de-risk it all the way to production. And they have all those attributes within a small, $25 million Canadian market cap. It's pretty rare. Usually you have to hand the baton off a few times to get
Mhm.
that from start to finish. And this team has what it takes to take it all the way, in my view.
And it is silver in the ground in Mexico. A lot of my viewers, a lot of investors out there, I like to reiterate that like you can buy, whether it's you're talking about a gold development stage company, exploration stage company, but these companies have defined ounces in the ground in these countries,
Mm-hmm.
and you can buy it for a lot of times for silver for $1 an ounce or $2 an ounce. Of course, there's a lot of things that need to happen, right, to get that
Mm-hmm.
silver or gold out of the ground, but really represents a great value opportunity. Do you have just a few more minutes to give us a
Of
quick
course.
update on American Pacific? That's another stock that I own. I know they had some big news this morning that came out.
Yeah.
Could
Yeah.
you share with us why you're so excited about that?
Yeah. Fantastic. News came out earlier this morning. Just incredible news this morning, Ron. I mean, I've done a lot of work in the States for 25 years. It's probably the most accretive transaction I've ever seen in the
Yeah.
sector. The company has done a great job. Like, again, my advice to my companies was, guys and girls, we're in a downturn here. Market caps have
Right.
got compressed. Let's not blow our brains out drilling. What is smart M&A we can do as companies? Let's say the companies that I own in my portfolio. What's smart M&A transactions that we can do to unlock value while the market's depressed? How you make hundreds of millions or billions of dollars in the sector, Ron, is buying when there's depression, blood in the streets. So you can
Yeah.
do M&A deals that you can't otherwise do when the market's flying and financings are easy to get. So if you look back to a year on, American Pacific had a 30% JV on their Madison project in Montana, which I really love, high grade gold, copper. We can talk about that if you want. And a 30% JV interest with DOA on their Palmer project in Alaska. That was at the beginning of this past year. If you look today, they had about $2 to $3 million in cash in the bank. If you look today, they own 100% of Madison. They now own 100% of DOA, and they've got $16 million Canadian cash in the bank without issuing any equity to get this transaction done. So it's an incredible
Wow.
deal-making team they put together. They now own 100% of both projects, which makes them incredibly valuable to unlock value either through future joint ventures or asset sales or drive them forward. Most major mining companies want to own 100%. They don't own 30%. So it makes them much more attractive. They have full control of these assets. Donald Trump winning the presidency, the House, and the Senate. They have two high-grade copper gold assets, zinc, precious metals, and base metals assets in the United States. I think the permitting pathway for these assets is going to be dramatically improved. You saw, Trilogy Metals is an Alaskan competitor of American Pacific. Their market cap went up 100% since Trump won because the belief is the permitting pathway in Alaska is going to get a lot easier. So now we own 100% of two assets that are extremely valuable. They have about half their market cap today. We're on 16 million Canadian in cash on the balance sheet, which is an incredible asset. 14 million ton resource in Alaska at 12% plus zinc equivalent with copper and silver mixed in there. And they're going to have a resource coming out on their Madison project, which no one's ever really done in the last 50 years, putting Madison all together, redefining the geological model, and they're fully funded to move these projects forward aggressively without any dilution for shareholders. It's literally the best acquisition / deal I've seen 25 years.
So they have all this cash on their balance sheet. They own 100% of both the big projects, Alaska and Montana. And let me ask you this. Obviously, there were millions of dollars spent over the last decades, however long it's been, on drilling and work that's gone in. I mean, the value opportunity, and it's not just American Pacific, it's true with a lot of these junior, but the value opportunity is astounding. I mean, there's been a lot of money already invested into both these projects at American Pacific. I would imagine possibly tens of millions of dollars that produced results, right? There's, it's been proven that there's minerals there, and the amount of, the valuations are so compelling right now.
It's a great point. So a Palmer, I know because I looked up the number last night. It's $116 million US has been spent on that project life to date. It's got a camp, it's got a resource, it's got all infrastructure in place. And now we own 100% of that. American Pacific owns 100% of that asset today. So it has American Pacific today as this morning, I'm not sure it has market where is it at today, but it's got a $30 million, $35 million Canadian market cap. And then Madison, which a lot of investors did not know, American Pacific had a joint venture with Rio. They've consolidated the whole district, which had never been done before. Madison has 40,000 meters, I believe, of drilling completed historically, never put into a resource. 40,000 meters of drilling at $300 US a meter. That's what's a huge amount of money that's been spent by previous operators. That American Pacific, as the new 100% owner of that asset, they drill a couple thousand meters this quarter. They'll drill a few thousand meters next year, but they can put out a new resource out, benefiting from 50,000 meters of drilling, of which they funded maybe 5,000 meters themselves. So these are, what I said before earlier, major mining companies can look at building versus buying. This type of investment, it takes years to move these assets to where American Pacific's portfolio is today. It takes tens and hundreds of millions of dollars to move them where they are today, or you can go do a greenfield. So that's what I'm talking about M&A tension in the space, is that you can walk in if you want American, Western US exposure to precious metals and base metals. You can do it yourself, or you can walk into opportunities like this where it's set up on the tee for you, fully de-risked, and you can aggressively move these projects forward that are years ahead of other projects that you have to do grassroots exploration, both in the permitting and the development side as well.
Yeah, the money's already been spent, and it's been proven that the metals are there. I have a friend who says he likes to buy dollar bills for a nickel, and it feels like in the junior mining sector, we aren't giving financial advice, but it sure feels like to me, even now with we have a little bit of a move up, you can still buy dollar bills for a nickel. And Michael, thank you for joining me today. You've been a wealth of information. I've followed you for the last couple of years. I know a lot of people follow you. Many people have just the highest regard for you, the highest level of respect. I want to mention to our viewer that if you want to learn more about Michael, there is a great video that he made with Warwick Smith, who's the CEO of American Pacific Mining, where you talk a lot about your philosophy behind investing, but also your philosophy behind kind of why you do what you do. And I won't ruin it for the viewer, but it's definitely well worth watching. I know you're a regular guest on our mutual friend Peter Grandich on his YouTube channel, where you discuss a lot of the companies that that you own, and your opinions on what's going on in the precious metals market. So people can go to petergrandich.com. Any other information you want to share with our audience regarding how they might follow you, get in touch with you, or anything you think may benefit them?
Yeah, I try to keep a profile. I keep the
Right.
social media to like guys like you, Ron, and Peter, who are the experts in
Okay.
that. But I do enjoy getting on YouTube. I get a lot of questions on what I'm thinking or what I'm investing in, so I enjoy
Yeah.
getting on YouTube. Once a quarter or more, out to some of my names that I'm involved in. It's my way of sharing once with one click of a button
Okay.
my view on the markets and stocks. I really enjoy your content, Ron. I think you do a great job, and really enjoy being on this interview. I'm happy to come back in the future with you. It's for me, it's a nice way to speak to everyone at the same time.
Yeah.
And I think investors, can make a lot of money in the sector. They've got to educate themselves. The one thing I'd pass along too is that maybe my approach to junior mining, just I view it as a venture capital kind of portfolio. You've got to spread your bets in the sector. You can't
Yeah.
go on Ron's basement and said, well, Mike Gentile or Ron said buy this stock and put all your money in one name.
Right.
My view is you got to own, 20 to 25 names if you can. Spread your bets over them. I try to put 1% of my portfolio as initial investment when I make an initial investment, and grow it over time to 5, 10, 15% of my portfolio, but invest more heavily in the ones that are working, because there is a high failure rate in this business, right? It's expiration.
Yeah.
Not all
Yeah.
these stories are going to become mines, but the ones that do work will make you 10, 20, 30, 50 times your money. And I know from experience, I've done it multiple times in my career, those winners will pay for your mistakes. But you got to have the staying power and the desire to educate yourself, like on shows like yourself, learn about the space, learn about investing, learn about the value, risks, and rewards of junior mining, spread your bets, and try to really be proactive and thoughtful about your allocation process. I think you can do
Yeah.
extremely well, especially with what we talked about, the valuations that we've seen today. I think the returns are going to be even more powerful than they have been in the past. And the setup for the sector has never been better, in my view.
Yeah. Yeah. Great advice. Well, thank you, Michael. On behalf of myself, it's been a big honor, and I know our viewer has gotten a lot out of this as well. And we will look forward to having you back here in the basement again. You're welcome anytime. So thank you.
Thanks, Ron. My pleasure.